Hello, good evening, everyone. Today we are in the fourth session of GST in our series Unleash the Potential. And today we have speakers here, Anchal Kapoor, and she is a national level faculty, basically from Delhi. And I have heard her so many times earlier also. And welcome, Anchal ji, to this session. Uh,
Thank you.
we have say Sakshi Jain, who is the treasurer of Agra branch. She will moderate the session, and all my wonderful, intelligent women participants. This is our endeavor to serve all of you the best. Whether you have come, you want to grow your knowledge. These all are case study based learnings, and we'll also have the repository of this session ICAI TV. So anytime in future also you can actually go visit and see all these sessions. We have all across in entire series the experts, speakers who will be sharing all their valuable knowledge in case study based forms and sharing their practical exposure. So whether you want to upgrade your practice, or if you are in the job and want to grow your knowledge, the practical knowledge, if you are in job and want to start your practice, or if you have taken a break in your career and want to restart your career, all these sessions will be very, very helpful. Very soon in this year, we'll be coming out with again a campus placement program on flexi hour basis, work from home model for all of you. The women specific campus placement program, which will be announced very soon. That will be the second year, last year, which we have already started. Uh, we also are planning various other activities, and which will be announced very soon. Again, friends, this series is on Monday, Tuesday, Thursday, 4 to 6 p.m. On every Wednesday, we have Sky High Symposium. The Sky High Symposium is a platform given to all the women members for sharing their knowledge, for moderating and enriching your knowledge. So take participation in all these programs which we are organizing for all of you members. On each Friday, again, we have Youth Excellence Symposium where all of you can participate. So all Monday to Friday, 4 to 6, please ensure, keep your time, make your time available, block your calendar for Women and Young Members Excellence Committee of ICAI. This is CA Preeti Saula and want to contribute a lot to the institute for the benefit of members and students. So stay in touch, stay connected all Monday to Friday. If you want to share anything, have any specific requirements, feel free to connect at any point of time. And with this opening remarks, I welcome all of you to this wonderful series. Today, Anchal Madam will be dealing with GST scrutiny and the refunds, which is one of the most important element in GST. And I am sure you will gain a lot of knowledge, and I wish you a wonderful learning. Thank you so much. And over to Sakshi.
Thank you so much, ma'am. So ICS Oxygen, on behalf of Women and Young Member Excellence Committee, once again would like to welcome all of you to this virtual series on Unleash Your Potential, Learn, Upskill and Excel. Now, before I hand over the proceedings to our learned speakers here, Achal ma'am, I would like all of you to be introduced with her. Here is an introduction. Achal Kapoor ma'am is a fellow member of ICI since January 2009 and a law graduate. She is in taxation practice for more than a decade. She pursued graduation in Commerce BCom from Guru Nanak Dev University, Amritsar, where she has been a gold medalist for her excellent academic performance. She attained third rank all over India in CA PE1 and second rank in Northern India in CA PE1, and also placed in merit list of university in graduation. As an additional qualification, she has also completed forensic audits and fraud detection, that is FFD course offered by ICI. Apart from having splendid academic background, she has been in practice for over 12 years in the field of indirect taxes and is well acquainted in the field of GST, including departmental and appellate work. She is a national speaker on GST and has deliberated in around 500 plus seminars and webinars across India, with the privilege of addressing an august gathering of 2,000 professionals. She is an approved faculty at National Academy of Customs, Indirect Taxes and Narcotics. Apart from this, talking about her memberships and awards, she is a coordinator, All India Federation of Tax Professionals, Indirect Tax GST Committee 2023, member of AIFTP, National Virtual Tech Web Committee 2021-2022, active member, Independent Tax Research and Analysis Association, renowned faculty of ICAI and GST Officers Training, felicitated by NIRC and AIRC branch as an eminent speaker on innumerable discussions and seminars, also presented with the award of appreciation by the Intellectual Forum Amritsar and whatnot. So we would like to welcome you, ma'am. And I know it's a virtual meeting. We all are sitting at our respective places, but still I want all of you to have a huge round of applause for our learned speakers here, Aanchal ma'am. Over to you, ma'am.
Thank you so much, Sakshi, for introducing me. And the name itself suggests Unleash the Potentials by a young and women and young members committee of ICAI. And I am very grateful to Priti Salva ma'am and the entire team for making me a part of it. And yes, I myself had an opportunity to interact with madam on a few occasions. And it's always pleasure to talk to you, and such a vivacious and energetic personality all the time. Thank you, ma'am, and thank you, WIMEC, for making me part of this. And I hope I will be able to justify the hopes that have been reposed on me. And all the lovely audience, just one thing, Sakshi, I want to ask, can I interact with the members through the chat box? Will they be able to send me the message or interact with me?
Jaya ma'am,
whosoever is from tech committee can tell me that. All right. Anyhow, you can message me, or if is there any way
what
to
model,
interact?
Aanchal, what model we have incorporated is that you can complete your session. So last half an hour or 15-20 minutes, we will have an interactive session where all the questions which have come on the chat will be taken up by Sakshi. And she'll moderate it, she'll give the question and you have to answer.
All right.
20 minutes, we are keeping like that.
All right. So very good evening to the lovely audience who is sitting on the other side of this. And really, I just want to make it an interactive session. So I will be asking telling you a few pointers in between on which we will interact in the last few minutes also. So friends, you know, the topic that has been allotted to me, as Madam said, yes, very, very interesting topics also. And talking about the first topic, that is GST refunds, is itself a topic which brings smiles on everyone's face. You know, may it be the party concerned, may it be the chartered accountant, may it be the department. So this is an area where the funds, instead of going into the department, actually comes to the person concerned, right? So starting with it, let me first share the screen. I just request you to kindly enable the screen sharing. Meanwhile, the screen sharing will be enabled. Let me talk about the refunds issue. Friends, section 54 of the CGST Act deals with the refund topic. And talking about the refunds, there have been many circulars that have been issued on this topic. But there is a master circular, which is circular 125. All the prior circulars were done away. And then this master circular 125 was brought in. After 125, there were a number of circulars like 137 and followed by the number of circulars even being issued recently. So what you need to check, Act section 54, from where the refund provision starts. Second, we have, I have been enabled the screen sharing. Let me share the screen with you. Section 54, we will be referring to the Act provisions. Then we have section we have the rules, and followed by it, we have the circulars from where we will be taking up the provisions. So here I share the PPT on GST refunds. All right. Let me make the screen show. Yeah, slideshow is... All right. So friends, as I was talking about the legal provisions that are contained in the chapter 11, that is from section 54 to 58, the rules are from 89 to 97A. Along with it, the forms are mentioned in the rules itself, and followed by it are the notifications and the circulars. 125 has been the main circular. 125 is the master circular, and then we have 135, 137 and such other circulars right in front of you. These were the old circulars, and then some new circulars were introduced. Now, talking about the definition of refund, my dear friends, generally the definitions in NEX are contained in section 2, but definition of refund is an exception. And if I talk about this in exception, refund includes means it's an inclusive definition, which says refund includes, and what it is talking about, that it is including the various types of refunds. So some types of refunds are mentioned in the include portion itself, like tax on zero rated supplies, deemed exports, unutilized ITC, right in front of you. Apart from this, section 54 subsection 8 and circular 125 also talks about various types of refunds. Now, because it is an inclusive definition, so it is not only restricted to these 4 parts, and also to the other 4 other parts that are referred in the other part of the section. So ultimately, how many types of refunds we have in GST is here right in front of you. So we are majorly we talk about export refunds. In export refunds, it can be with payment of tax or it can be without payment of tax. So exports are the first important type of refund. If it is with payment of tax, don't worry, we will be doing all these types of refunds with examples, right? So this chart is basically to give you an idea. And can you see some numbers on my screen? Like 2, 7, 6. So in all these numbers, as Sakshi ji is right there with me. So Sakshi ji, can I pose you certain questions on the behalf of everyone today? Chaliye. So if I talk about the exports, which you can see on my screen, and various numbers that are being shown there. So these are linking that how on the site, see, this will link how on the site these refunds we make the application. Like these 1, 2, 3, 4, 5, 6, 7. I have hereby linked that how this application will be made on the website of GSTN. Chale. So what I was talking about, that exports are one of the major type of category, with payment, without payment. Friends, let me tell you that this exports, for the time being, both the categories are there. There has been amendment in the law, but the goods have not yet been notified. So hence we have both the options. We can go with payment of tax also, and we can go without payment of tax also. But you know, there is only one category of refund. One category of refund for which we need not to make any application. Friends, let me tell you, in GST, it is not like income tax that now when you file the refund and you automatically get the refunds, file the return and you get the refunds. No. Here in GST, you have to make application for whatever type of refund you want to file, except export of goods with the payment of tax. So it is the only category for goods that I want to highlight here is export of goods without payment of tax. That comes with no application is required. Whatever is your shipping bill, that is export document, will be a deemed application. So as such, we do not require any separate application for the same. Now, talking about the other things, if I talk about these other than this category of no separate refund application, apart from this, all needs the applications to be made. So may it be with payment, may it be without payment in exports. Then we have the next category as SCZ supplies. As you know that SCZs are the specific areas that have been marked. So whenever you supply the goods or services to SCZ, it is same as exports. Same as exports. So or you get the refund benefits on SCZ supplies also. And one of the important category after this comes is refund of unutilized ITC on account of accumulation due to inverted tax structure. Friends, we will be dealing with this category also in detail, but let me talk about it. Unutilized ITC on account of accumulation of inverted tax structure. Chaliye, if I pose you a question, there is a cement company. Cement company is purchasing the cement from outside India at the rate of 280 rupees per bag. It is importing the cement at the rate of 280 rupees per bag. When the material comes to customs, they says we don't know this value. Custom has its own valuation, so it will be valued at 300 rupees per bag. So now they value it at 300 rupees per bag. They charge the, on cement, we do not have BCD. We only have the IGST at the rate of 28%. So 28% is being charged on cement bag, but at the rate of 300 rupees per bag instead of 280 rupees. The person, when imports the cement, sells it in the domestic market and his selling price is 295 rupees because he imported at 280. He paid the duty on 300, that's fine. But he has, he's selling it at 295. Now he has credit accumulation. Reason? Sale is at 300 rupees. Sale is at 300 rupees and the purchase is at the sale is at 295 and the purchase is at 280 rupees. Now my question arises, will he be able to get the refund of such credit accumulation? Answer is no. He will not be getting the refund of such accumulation. Reason? The accumulation is not due to inverted tax structure. No. The purchase is also taxable at 28%. The sale is also taxable at 28%. Both are taxable at 28%. Hence, we cannot say that there is tax structure inversion. Tax structure inversion means when the rate of input is higher and the rate of output is lower. For example, the textile industry, where we have the input rate at the rate of 18% or 12% and the outward fabric, the output which is going, the fabric is taxable at 5%. Inversion, 18 or 12 is to 5% on the output. That is inverted tax rate structure. But here, when I took the example of cement bags, it is not inverted tax rate structure. Rather, it is accumulation due to valuation differences. It is not eligible for refund. My dear friends, it is very important to notice, even if you have huge credit lying underlying, it is not always that you will get the refund for the same. Even if you are going to shut down or close the business, please mind it. You are eligible for refund of input tax credit lying underneath only in 2 situations, or rather 3. If I say 2, it is zero rated supplies covering exports and SCZ. Or if I just divide in up to the last point, it says exports, SCZ suppliers, and inverted duty tax structure, IDS, tax rate structure. It means if you have underlying input tax credit, huge piling up, you will be eligible only in these 3 situations. Now I give you one more example. A person has huge credit accumulation. He's going to shut down his business. But he says, oh my God, I have such a huge credit lying underneath. Can I get the refund for the same? This is what the query is being generally asked to the asked by a person in business. The answer is, I will check. Is there anything other than this? Other than these reasons, answer is no. If your case is falling, accumulation is due to export, due to SEZ, due to inverted tax structure, the answer is yes. All right, chaliye. So after that, excess payment of tax. You were supposed to tax a particular product at 5%. Suppose you made a sale of 100 rupees, taxable at 5%. Inadvertently, you said your article, go and file the return. And you were supposed to say 5%. And what he did, 5% in SGST, 5% in CGST. So he paid 10%. When you check the return and you said, oh my God, you have paid 10 rupees, you were supposed to say pay 5. The person says, okay, I took it as 5. And you were saying in all total 5, 2.5, 2.5. So this is the case, excess payment. Now, what is the difference between excess payment and wrong payment, which is the next category? Wrong payment of tax means when instead of paying C and S, you pay IGST. Instead of paying IGST, you pay C and S. That is wrong payment of tax. Right? And if I say that you are paying excess, you were supposed to pay 5 rupees and you paid 10 rupees. And moreover, you know what? The balance is also deducted from your cash ledger because you have already filed your 3B. So this is now when you have paid excess and you want the refund for the same. Apart from this, we have one more category, which is deemed exports. Deemed exports has its own definition in which it's being specified. There are particular cases in deemed exports, and only those cases which are covered by deemed exports can apply for refund under this category. Even the recipient can get the refund, or even the supplier can get the refund for the same. Now, followed by it, we have another category when suppose you had a case in some assessment. Later on, you went into appeal for that case and the appeal decision comes in your favor. Because in assessment, you lost the case, you have to make the deposit, you have to make the taxes, you have to pay the taxes. So when in the appeal, you get the benefit and you want the refund of the previously paid amount, you will get apply in this category. And last is if your balance is lying in the cash ledger. No deduction. Friends, please make it a point. In this category, which is refund of excess payment of tax, the balance is deducted from your cash ledger. You file 3B, the balance is deducted, the taxes have been paid. But in the last category, refund of excess balance is one of the category where the balance is lying in your cash ledger. Even if you, let's suppose you're going to shut down the business. I gave this example linked with other also. In case you are going to shut down the business, for ITC refund, I have to check whether it is falling in 3. But for the cash ledger, I will not check anything. Any balance which is lying in the cash ledger, you are eligible to get the refund for the same. But you again have to make the application for the same. And one more thing. There has been recent changes which says, can anybody tell me, or if I say you, what is the period to apply for any refund? It is generally 2 years. Why I use the word generally? Because 2 years is to be counted from a new date for every type of refund. For export, 2 years from the date of exports. For payment of taxes, 2 years from the date of payment of taxes, and so on. And for this electronic cash ledger refund, even the period of 2 years will not apply. So if you have electronic cash ledger, money is lying therein, you can get the refund for the same, even beyond the prescribed period of 2 years. So I can understand right in front of you are so many types of refunds that are there on your screen. Now let me come to the next one, which talks about how we apply the refunds online. And if I talk about how we apply the refunds online, let me mark it for you also. See here, refunds. When you go to the services part, then you go to the refunds part, and here you have application for the refund, where you can apply for the refund. And these are the categories. See, this is the first category, electronic cash ledger, on which even the period of 2 years does not apply. So these are all the different categories of refund linking with what we talked about. Only one is not here. Only one is not here. And I know all of you know the answer. Exports with payment of tax. Export of goods. See, friends, export of services is there with payment of tax. What's not there? Exports of goods with payment of taxes. For example, you are exporting some textile item out of India. You are exporting some dhoof agarbatti out of India, essence items with payment of taxes. Then you are not supposed to make any application. Your shipping bill is the deemed application. But if you are providing chartered accounting services outside India, export of services, you can do it in two modes, with payment of tax or without payment of tax, that we will discuss. So for export of services, we are supposed to make the application. Right, chaliye. Now we move ahead. Let me come to section 54 better a little, although we will move to examples after this. If I talk about section 54, subsection 1, any person, you can claim the refund. Okay, now a question sometimes comes, can we claim the refund of interest? Can we claim the refund of excess fee paid? Answer to it is yes, because section 54 says you can claim the refund of any tax, interest, any other amount paid by him, but dear taxpayer, not even taxpayer. It says any person. And recent circular has been issued which says it can be a buyer, it can be a seller, it can be a registered person, or even now, my dear friends, a URP, unregistered person, can also file the refund application. For example, let's suppose you are a buyer and you are unregistered, you used it for your own purpose and you want to claim the refund due to the unjust enrichment applicable. The seller is not getting the refund, the buyer wants it. Yes, now even an unregistered person can apply for the refund. So any person, if you want to claim any refund, you have to make an application before the expiry of 2 years. This is what I mentioned, that 2 years is the time period. What's the form? I have stolen the rules, and I put it in the act itself. So it is RFD 01 is the form. Rule 89, which states RFD 01. You have to make an application. And what is the important point now? From the relevant date. And what is relevant date? Have a look. If I talk about the relevant date, here it is. For every type of refund. Oh, you can again see on your screen the numberings. And you know why I have done this numbering? To link all the 3 screens. First, types of refund. Second, where to put the application on the portal for that refund. And third, for each category, what is going to be the relevant date? For example, if it is exports of 7A and 2, exports, then you have to make the application within a period of 2 years from the date when the ship or aircraft leaves India. If it is by the land, when they pass the frontiers. If it is by the post, the date of dispatch of goods. So in all these categories, in export category, it is from the date of export, the 2 years will be counted. Now let me come to the unutilized input tax credit due to inverted duty rate structure. If we talk about inverted duty rate structure, for example, I tell you by example, let's suppose you are filing the refund for June 2022. So you answer yourself once in your mind, huh? Tell me, June 2022. Then June 2022, 3B would have been filed on 20th July 22. Right? So it is 2 years from the date of filing of 3B. So my dear friends, due date, not the actual date, huh? Due date for furnishing of return in which the such claim of refund arises, meaning thereby, if you are claiming the refund for June 2022, the due date of 3B of June 2022 is 20th July 22. So 20th July 22 plus 2 years. It means 24, yani 19th July 2024. Till that date, you can apply for the refund. So for exports, it is the date of shipment. For IDS, inverted duty structure, it is the due date of filing of return plus 2 years. And for the other types of refunds category, like wrong payment of tax, like you say excess payment of tax, in all those cases, it is the date of payment of tax. Date of payment of tax. For services, when the services are exported out of India, 2 years will start from there. So there also we have various methods: supply of services, payment after completion, or payment before completion. If it is payment is coming before, yani advance is there, in that case 2 years will start from receipt of payment. And in case the payment is not coming in advance, it is after completion you are receiving, so then the date of issue of invoice. Because my dear, in goods, please make the difference. In goods, we have the trail, when the goods are crossing, when they are passing the frontiers, when the ship is leaving, when the post office is making the date of dispatch by the post office. But in services, we do not have that trail. So we say whenever you are exporting the services. Now a question mark arises, which will be taken as date of export of service? If payment is received, then it is the date of payment received before the completion of service. If it is after completion of service, then it is the date of issue of invoice. Right? All right. Chaliye. So we talked about, all right, as per section 54, any person, you can take the refund by making an application within the period of 2 years from the relevant date. However, you see, the cash ledger is covered under the proviso. 2 years period will not apply. The government has clarified it with the help of a circular also. Moving ahead, lots of theoretical talk. Theoretical in the sense where we are, although we have seen the GSTN portal also, but now let me come to some practical aspects also. I tell you a story what happened. The reason of this circular, which is right in front of you, was a case by Honorable Delhi High Court in case of Pitambara Books Limited, right in front of you. And you know what the court said in this case and what the person asked for in this case? I tell you what it was before amendment. Before amendment, because a beneficial amendment was brought through this point. Now, when you go for applying for the refund, you might have a question in your mind that for how much of a longer period I should apply for the refund? 6 months, 8 months, 12 months, 18 months, 24 months. Now, don't tell me I will not go beyond 24 months. And you all know the reason. Just think over it. Why not beyond 24 months? Because the maximum time period is 24 months, yani 2 years. So a refund can be applied within a period of 2 years, yani maximum of 24 months refund can be applied simultaneously. But what was the problem? What was the problem was that previously in circular, master circular 125, it was mentioned that you cannot bunch the claims across years, meaning thereby that if it is March and April, you cannot bunch it. You cannot bunch it. And there was no such condition in section 54. No such condition. My dear friends, please make it a point. Provision flows from the Constitution, then to the Act, then to the rules, and then to the circulars. Circulars can not enhance the scope of the law. They can only supplement the law, but they cannot add additional points to it. They can explain, they can the provisions of the law which are already there. But this circular was going beyond this point that you cannot bunch the refund claims across years, meaning thereby it was restricting the maximum period for which one application could be moved is only 12 months. And there was a huge problem. And you know what was the story? Now this gentleman who was an exporter, he said, what is this thing you are talking about that I cannot combine March and April together? You know what problem he said? He said, imagine, I purchased the material in the month of March. So I have an input of 1 lakh rupees in the month of March. And I processed the goods. I exported it in the month of April. Now you say me, you cannot move a combined application for March and April. For March, there should be separate. For April, there should be separate because there is segregation of the financial year. Hence, the refund becomes zero. Reason, in this month, there is no export, refund zero. In this month, there is no input, refund zero. He said, I am not getting my legitimate refund also. So the Honorable High Court came up that this point, which is given by the circular, is not correct and allowed the bunching of refund claim across the years, provided it should be within a period of 2 years. Friends, let me tell you one important point. Sometimes some professionals also think, okay, oh, March time period is over. No worries. We will combine April, May, June with the March and we'll claim it for March. No. Even if you bunch and 2 years of March have expired, that will be left. Officer will only process for April, May, and June. So in bunching also, it should be within a period of 2 years. So March should be within a period of 2 years. So talking about now, after amendment, he was very happy. He said, now I can combine both March and April in one application. What happened? Purchase input, 1 lakh. Exports, 12 lakhs. And he was eligible for entire refund because it is a 100% EOU unit. So he was eligible for 1 lakh rupees of refund. So as a result of this, bunching of refund claims across financial years is now allowed. And when it is allowed, even it is allowed on the portal also. Because of this reason, now if you have, you can make the application of maximum 2 years within the time frame on the portal. All right. So moving ahead, as we have some time constraints also. So talking about coming to the process, and then I will move to the types of categories of refund. Friends, first of all, the application for refund will be moved in RFD01. RFD01, which is the refund application. You file the refund, officer checks it, but checks firstly only from the point of view of documents. Friends, these points are very, very important because practically when you go and apply for the refunds, officer reject those refunds, you must be clear about what can be the grounds of rejection and at what stage it should arise and in what time period it should arise. So this chart is a comprehensive chart which gives you an insight that how a refund works. And how it works, have a look. You file the application in RFD01, officer checks it. If he's satisfied, all right, all the documents are correct, he will issue you RFD02. And what is the time period? Within 15 days of you making the application. But if he is not satisfied only as to documentation. And you know where is the documentation written? Circular 125 provides you the exact list of documents that is required for each category of refund. And nothing beyond that documents can be asked from you. So it gives a comprehensive list, type of refund wise, what you are supposed to make, and then nobody else can demand you any additional document as to that. Now, but he was not satisfied. He said, no, there is some deficiency. You have not given me this particular document. He will issue you RFD03, deficiency memo. In short, we call it as DM. DM, that your documents are not complete. And mind it, when the officer issues you DM, your RFD01 comes to an end. You have to make a fresh application, and that application should be within a period of 2 years. And you know, there was the major setback. In India, we are in the habit of doing the things as in the last dates. Is that so? Yeah, many a times. Oh, taxpayer says, अरे मेरे 2 साल एक्सपायर होने वाले हैं, और जो प्रोफेशनल भी होते हैं, तुमको अभी याद आया है 2 साल एक्सपायर होने वाले हैं, then you are coming to us. In that situation, let's suppose there were only 10 days left in 2 years and the person comes. In our example, it was 19th of July 2024. Now, let's suppose the person comes on 10th of July 2024. Okay, apply my refund. You say, okay, there is time period still 2 years. There are still 9 days to expire. You make an application of refund. Officer had 15 days. In that period, he issues you a DM. Your application is not correct. As a result, the originally filed RFD01 was finished, done away with. And as a result, now when he makes the fresh application, the period of 2 years had expired. In order to overcome this difficulty, government has given a provision that in case you are left with less than 15 days and officer puts a DM, we will give you fresh time period. We will give you fresh time period of the time taken by officer, or maximum 15 days, because in 15 days he has to issue the DM. I hope you are getting. Once the officer puts the DM, let's suppose in your case, you made the application on 10th of July, officer issues DM on 20th of July. Previously, what used to happen? Refund gone. 2 years expired, nothing will happen. Now, government says how much time he has taken. You say 10 days he has taken, 11 days he has taken. So government says, I give you 11 more days, maximum of 15, you can make the fresh application. So this is one of the benefits. Don't worry. This example, which I discussed with you, is already the part of PPT in the later part. But I explained it here so that you are able to understand that once the DM is issued, you are supposed to make the fresh application. And that should also be within a period of 2 years. But now a provision has been introduced which says that if the officer issues DM beyond the time period, you will get those additional days, maximum 15 days, because maximum time of DM is 15 days. And my dear friends, these time periods that are right in front of you on the screen are mandatory time periods. You cannot skip those. Now, coming to, if it is a export refund, he has to pass a provisional order within 7 days. See, government wants to promote exports. When government wants to promote exports, it says that within 7 days, export refund must be granted on provisional basis. Then you check and give the 90% of the export refund has to be given within 7 days of provisionally of filing of refund. For other refunds, there is no such time period of 7 days. Then your refund goes. Officer now check the refund on technical grounds, because previously checked only, is there any deficiency in documents? No, clear that stage. Now it checks your refund technically and issues you an SCN. You have to file the reply to SCN within a period of 15 days. Once you file the reply, he will issue you the refund order, RFD06, and will issue you the payment advice, RFD05, and you will get your refund. And this entire process till crediting of refund to your account must be done within a period of 60 days. Ultimately, from the government, the money must come into your account within a period of 60 days. And if that doesn't happen, you are eligible to get refund with interest from the government at the rate of 6%. I know, don't ask me. Refund aa jaye automatically is a big deal. Automatically to nahi, when you make the application and then it comes, and getting interest is all more a big deal. So you must anyhow make an application for refund if your refund is for interest on refund, if your refund is delayed beyond period of 60 days. right? So entire process should be done within a period of 60 days from RFD 01. Now, how it should be done on the portal and as per the category of refund. So first category I'm taking with you is inverted duty structure. I will be taking you through the practical examples for all this. Just be with me. Now, in case you want to check whether a particular case is fit for inverted duty structure, only take the rates of inputs. My dear friends, in GST, we have three things: inputs, input services, and capital goods. In inverted duty rate structure will apply only when the rate of inputs, yani 12%, 8%, 18% is greater than a rate on output, that is 5%. And in this category, you do not get the refund of capital goods. You get the refund of input services also to a limited extent. You will see the formula, you will get to. So it is basically is the case for inverted duty structure or not. Now have a look on the slide in front of you. There is an input A and there is an input B. Input A has 5% rate, input B, please find it, you have to check the rate. You have to check the rate. And the output is taxable at 12%. Now, is it a case for inverted duty structure? Answer is yes. How much input does a person have? 25, 360. So he has a total input of 385 rupees. How much output he has? 360 rupees. He has a balance of 25 rupees accumulated as his ledger. And please make it. It is not only that you will take the input of only 5% item. That, okay, it is 5, that is 12. No. When there is a 5% item, even the 18% total input will be taken, and you see 5, 18, 12. Yes, it is a fit case for refund. It is inverted rate structure because input we have 5 and 18 and in output we have 12. So you will not leave this 5% only, not only taking 18, full ITC will be taken. Now in this case, dear, formula is very, very easy. Now, first, let me show you the next example. You will get to know. In this case, the person has input tax rate of 12%. Input service, 18%. Output, 12%. Now, think. He has a credit accumulation. And you know how much credit accumulation? 60. Even more than what was there in the previous case. In the previous case, we have only 25 rupees accumulation. In this case, he has 60 rupees as accumulation. Because input is 60 plus 360 and output is 360 only. But still, it is not a case of inverted duty. It is not a case of inverted duty because input service rate is higher and we do not have to consider the input service. Input is to output rate to be checked, which is 12 and 12. Because input and output have the same rates, it is not a case of inverted duty structure. Inverted duty structure. I hope you could understand. So that is why when I explained you this example, I particularly mentioned that it is rate on inputs. I show you. I know I have made lots of markings here. Let me remove it for you all. Right. So it is rate on inputs only that has to be compared with rate on outputs. If it is greater, yes, it is a fit case for inverted duty. Now think this. A person may have two types of sales. Inverted, non-inverted. How he should be eligible for refund? Only on inverted. Only on inverted. What should be the base? Sales should be the base. So no need to grab the formula. You can yourself make the formula. How come? Have a look. on that very easy example which we took, and then I will take you to a higher level of example also. Have a look. Let me raise this entire example, the markings on it. Yeah. Okay. So in this case, we have 25 rupees. We had 25 rupees as accumulation. Now, how will you say? Here, the full sale 3,000 is on inverted basis. So no issues. Input 25 divided by total output, total sales 3,000. Multiply by total inverted sales 3,000. It means for input, you have to apply the ratio of sale. Here, input and output both are same. So this should be total, not 25. Sorry. Let me correct it here. Total input tax credit, which is 385. Divided by this, multiply by turnover, minus. You have used the tax out of it. Tax on inverted duty output. You have used 360 rupees. So this formula gives you that it is 25 rupees which you are eligible for refund. So ultimately saying what the formula has to say, it has to say the refund, the ITC divided by total turnover multiplied by the, let me show you the formula here. ITC in the ratio of total turnover multiplied by inverted minus. No, previously so it was minus only, the tax payable. But there the persons, the RTPs had lots of objections that why you are not considering the input services. Hence, the formula is changed. So this is the earlier law and this is the new law. A very, very welcome change. And now what is this welcome change? You have to be with me very, very concentrated to understand the slide, my dear friends. Please have a look. First, I will take you to the earlier law. No, first I will take you to the statement. Now this entity, take any name, take Sakshi ma'am's entity is having a total turnover of 1 crore. Because right now I can see just her name on my screen. So total turnover of 1 crore, 50% inverted, 50% not inverted. Let's suppose 50% he was trading. And let me tell you, under this category, you do not get the refund of trading turnover. So let's suppose this was trading turnover. It was not eligible for refund. He was eligible for refund on inverted 5%. Okay. He said, how much is the input? 6 and 2, 8 lakhs. Total input. No. You don't have to take the ITC on services. No. Only ITC on goods. Okay. 6 lakhs. Divided by total turnover of the concern. My dear friends, many people do this mistake. They said, okay, this 50 lakh is not eligible. Keep it outside. No. If I talk about total turnover, it will be 1 crore. And if you do the other way, the refund amount will be calculated wrong. Right? Multiply by inverted duty, which is 50 lakhs. Minus, previously it was taking output tax only on inverted, 2.5. And here there was a catch. Previously, he was getting the refund of 0.5 lakhs only. 0.5 lakhs, this dot is not, 0.5 lakhs only. Now, what government made the change? They didn't change the first part. They only changed the minus part of it. Have a look. They changed the minus part of it, this. What changed? Previously, you were subtracting the full tax of 2.5 lakhs. Full tax of 2.5 lakhs. Now, this is no 2.5. This will be taken in the ratio of ITC on services, ITC on inputs divided by total ITC. How much is the total ITC? 8 lakhs here. 6 and 2 is 8. 6 and 2 is 8. Oh, wait. 6 and 2 is 8 lakhs. 8 lakhs into ITC of inputs 6 lakhs, because government's person says here you are taking input as 6 lakhs, output you are taking fully. Why? Give me the benefit. Even the output is being paid from input services. You don't want to give me the refund of input services, does not matter. But at least give me the benefit of utilization. Hence, now you will not deduct full 2.5 lakh. You will deduct it in the ratio of ITC, that is ITC on input divided by total ITC, and your refund amount increases substantially from just 50 lakhs to 1.125 lakhs. This is one of the welcome change owing to Honorable Supreme Court judgment of VKC Footsteps. Actually, that judgment was not favorable. You know, that judgment says, okay, in IDS, that's one thing more I want to ask you. Is refund a statutory right or it is a constitutional right? It is not a constitutional right. It is a statutory right. If statute allows you to have the refund, you will have. If statute does not allow you, you will not have the refund. So, Honorable Apex Court said that the statute does not want you to give refund of this 2 lakhs on services. You will not get. But yes, there is a flaw in the formula. That can be considered, and this is the newly drafted formula, a very, very beneficial, although entire 2 lakh of services could not be refunded. However, a part of it was included in the formula and the taxpayer gets the proportionate benefit. Friends, the formula gives you the maximum amount. On the site, there are 2 balances available. The period to which the refund belongs, for example, in our case, it was June 2020-22. And when you are making the application of refund, so amount eligible will be least of the following. Least, as per formula 50,000, as per June balance, June 22 balance, it is 30,000. Now, when you are making the application, it is 28,000. So you will get 28,000. Firstly, it will be deducted from IGST. If IGST is not available, then equally from C and S. Equally from C and S. All right. So these have been the various examples. I'm not taking much of this. Now let me come to the export of goods and services. If it is export of goods, we do not have to make any application. If it is export of goods without payment of tax, it means LUT. LUT is what you say, see, in India, there is a rule. Export the goods, not the taxes. So they say, if you are exporting the goods, we will give you the benefit. You don't have to pay the taxes. And you are happy. You just give an undertaking. LUT means letter of undertaking. When you give undertaking that, okay, I'm exporting the goods, government says you don't pay us the taxes. Even you pay the taxes, you will get the refund for this thing. So person has the option not to pay the taxes, apply for LUT at the beginning or whenever you are going to export. And in this also, you will be given the refund. Refund of what? Somebody asked me, मैंने तो LUT apply कर दी, then which refund are you talking about? Arey, government gives you one more benefit. Let's suppose you purchase the things at 100 rupees and suppose there is a 12% tax rate. You paid 12 rupees at tax because you purchased the goods from the market. Now you are exporting the goods under LUT at 150 rupees. Okay, government says, don't give me any tax. Don't give me any tax. Person says, sir, what about this 12 rupees, which I have as input? Because I don't have any output. Now this 12 rupees will get added in my cost. Government says, wait, taxpayer, you will get the refund of this 12 rupees also. And that 12 rupees ITC will also he get as a refund. Again, the formula is very, very same. ITC divided by total turnover into zero rated turnover means your export or SCZ turnover. But here, there are 3 categories: input, input services, and capital goods. You just don't get the refund for capital goods, whereas you get the refund for both input and input services in case of exports. There, it was only and only a proportion of IS through the formula. In this category, we get I as well as input service. All right. So these are the documents I have placed here, that this is how the export invoice is there. There is a shipping bill also. And the export which has to be taken is FOB value giving in the shipping bill. That is considered as the exports. Now, friends, one important thing, and most probably the last thing for export part of the today's topic, the export or the refund part of the today's topic, a person can switch between with payment and without payment anytime. You can switch between with payment and without payment anytime. As a result, now when he should go for with payment or without payment, mind it, taking of LUT does not mean that you have to stick to the LUT. No. If I have one thing beneficial, I can stay in LUT. If I can want to move to with payment, I can do so. One consignment with payment, one consignment without payment. Yes. Now, which one is beneficial and when? Have a look. Let's suppose this person is exporting the goods worth 1 lakh. GST 12,000, 12% is the rate. Now let's see his inputs. He has inputs, input services, and capital goods. Total amount is 10,000 ITC. Now, first case, he goes for without payment, LUT. Okay, if he's going for LUT, he does not pay any tax on output. No, rather he will get the refund of input, but only I and IS. He will get the refund of 5,000 rupees because capital goods are not allowed as refund. Now come to the option number 2. Person says, no, I don't want to go under LUT method. I want the payment of tax. Whatever you will pay, you will get the refund. Now, how much tax has he paid? 12,000. He will get the refund of 12,000. So if you have, what is the crux of the story? If you have capital goods purchases in a particular month, always with payment of tax is a better option. Because when you are under with payment of tax, you can even encash your capital goods credit. However, vice versa, if you have cess in your input, cess, then it is without payment of tax, which will be beneficial. How come? Have a look. 1 lakh, 5%. He will get 5,000 as refund under with payment of tax. However, if he goes by with payment of tax, he will get 5,000. Without payment of tax, he will get entire 6,500, full input, including cess input. So without payment of tax turns out to be better. Even if you have credit piled up, see, person has 32,000 as input. And only 1 lakh of goods are exported at the rate of 5,000. Only 1 lakh. If he goes by with payment, he will get only 5,000 as refund. And if he goes by without payment, entire input, 32,000 he will get as refund. It is called as preponement of credit, refund. He has preponed his refund, he will immediately get 32,000 rupees. So in this case, without payment of tax is a better option. So we can see that if they are capital goods with payment of tax, if there are, and you can frame your business like this. You can talk to your client, okay, if you want to purchase capital goods, now this month we will be going for with payment of tax. Okay, are you purchasing the goods which has cess? Okay, we will go for without payment of tax. If you are having huge purchases and very less sales, exports, without payment of tax is a better option. So likewise, you can choose between the things. Friends, moreover, there are other categories of refunds like tax, cash ledger balance refunds, which are very, very easy. Apart from that, you have excess payment of tax, wrong payment of tax option. Let me show you. Cash ledger refund. So even the TCS or TDS that is deducted, that also comes in your cash ledger. You can take the refund for the same. TDS you can get as refund. Deemed exports. So these are the 4 cases of deemed exports where you are eligible for the refund. And see friends, this is a comprehensive chart that under what category you get what amount as refund. Wrong payment of taxes, you get the tax refund. If you are under inverted duty, you get the ITC as refund, right? And also I have given here the list of documents here. As per the category, what you are supposed to give to the officer as per the different categories of refund, right? And even the amendments that I talked, yes, now if you file a wrong application, you can even withdraw that application. And I talked about you will be given the extra time if the officer puts the DM. This is the example for the same, which I discussed with you earlier. You can withdraw the refund application before the officer processes it. And very, very important feature, there must be Aadhaar authentication for the refund purposes. And this is the wrong category of refund. C, you were supposed to pay C or S, you paid I. You are supposed to pay I, you paid S. So this category of refund is recently being started by the government. So the time period extended is available. And one thing more, and very, very important, government has given the benefit of 24 months of the Corona time period from 1st March 2020 to 28th Feb 2022. That period will not be included for your refund time period of 2 years. Means your time period will turn into 4 years. The time period for that 12 months will not be counted, 24 months will not be counted. So even now you can make the application for April 19 refund also. May 19 refund also. Otherwise, so it would have expired in 2021. But now 2 more years, 22, 23 is also given. So April 2019 onwards refunds can still be filed because of the benefit given by the government through this notification, which I have also put in here for your reference. Here it is. The period of 1/3/2020 to 28/2/2020 will not be counted. Yani additional 24 months are given to you, right? So I now shift on to the next topic. Let me share that screen. Meanwhile, you can have a water break, right? Right, let me connect. I hope you enjoyed the refund session. Let me come to the another one. Okay. So, lots of sections to be done. May it be the assessments. May it be the... Right, let me close the refund PPT so that it doesn't... Right. So may it be the assessments, or may it be the departmental audit, or may it be the appeals. Right. So friends, up till now, we were talking about the refunds application and all. Now we are moving to the litigation runway from the compliance runway. So it is the compliance part is left separate, and we are moving towards the litigation part now. Let me share the screen of GST assessments with you all. Let me make the slideshow. Right. Okay, assessments, litigation, how we have to proceed for the same. Right. Assessment term is not defined in the law anywhere. Yeah, it is. It is defined, but in a very limited sense. And you know what it talks about? That what assessment is. So if I come to the term assessment, means determination of the, as per section 2 clause 11 says, determination of tax liability under this act and includes. So where they determine your tax, let me take the marker. Determination of tax liability and includes, only includes, inclusive definition. So it has both parts, means as well as include. Means part says that, okay, it is determination of tax, and includes part, yani inclusive definition, and talks about various types of assessments, that is self-assessment, reassessment, provisional assessment, summary assessment, best judgment assessment. So let's deep dive into the assessments. Friends, this is an area which talks about that how the officer takes up the assessment. And let me tell you, the base of GST is same like income tax, where the assessment means self-assessment. You have been given a form, you yourself assess your liability, fill the form, that is okay. May there be the case that officer can scrutinize your return. 100% scrutiny does not take place. So the entire mechanism of GST is like income tax, is based upon self-assessment. Unlike customs. Customs is not like that, right? Now, so we have section 59. So we have section 59 to 64 that talks about the assessments. So we have first self-assessment, then we have is the after self-assessment, provisional assessment. Provisional assessment ke baad we have scrutiny of assessment. This is the types of notices which we are getting these days. Section 62, if you are a non-filer, you will get best judgment assessment notice. And you know, this notice comes under section 46 itself. So there is no separate notice for this. Unregistered person you are, but you are liable to pay tax, section 63. Special cases, summary assessment, section 64, where the department has this point that he can run. Once assessments and audits are done, and there is tax payable by the person, the demand notice under 73 and 74 can be issued. So my dear friends, assessments and the audits, you see from 59 to 64, we have assessments. Section 65, 66 is audit by the department or by the chartered accountant in special cases. Chartered accountant or CM is in the special cases. And all these are the trigger points for recovery under section 73 and 74. Right? So after this, you get the notices of 73, 74. You can directly also get, but these are the trigger points for getting the notices if there is any demand pending. Now, I told you that the entire concept of GST is based upon self-assessment. And you know, section 59 is only a one-line section. Only one line. What it says, every registered person shall assess the taxes payable under this act and furnish a return for each tax period as specified under section 39. So, taxpayer, registered person, my dear friends, each and every word here carries a relevance. I have particularly marked the word registered person, not the taxable person. Now, what is the difference between RP and taxable person, registered person? Taxable person is the person, whether registered or not, liable to be registered. But registered person is one who has taken the registration. So every registered person, you will yourself assess your tax and you will furnish a return under section 39. Now, let me ask you a question. Is section 39 return, yani 3B, is a valid return as per GST or not? Is that a valid return under as per the GST or not? if you had asked me this question a little or a few months back, I would have said it's a dilemma. But now, after the Honorable Apex Court judgment in case of Appen Company, based upon Bharti Airtel judgment, Honorable Apex Court has held that GSTR 3B is a valid tax return. So, taxpayer, just tell me, is GSTR 1 a return? Is GSTR 1 a return? Answer is no, not at all. GSTR 1 is not a return. GSTR 1 is only a statement. So what is a return is 3B. So every registered person shall assess the taxes payable under this Act and shall furnish a return for each tax period as in the form 3B section 39. All right. So what are the returns? 3, 3B, 4, 7, 6, and 5. So for normal taxpayer, it is 3. Now 3 does not exist. It's gone. It will never come into picture. Now 2B will never come into picture. So computation, GSTR 7, TDS, GSTR 6, ISD, and GSTR 5, NP, the non-resident taxable person. So first type of assessment was self-assessment. There are a number of issues. That is the annual return covered under it? The answer is no. It covers section 39 return and various other issues. Abhi, I have already told you now 3B is a valid return as per Honorable Supreme Court judgment in Appen Company. So dear taxpayer, you evaluate your tax and you have to pay that tax in section 59 in your 3B. Right? Now, after this comes is the section 60. Which is provisional assessment. And if I talk about provisional assessment, you know what? Taxpayer has a doubt. What doubt? Taxable person, either you are not able to understand the value or you are not able to understand the rate of tax. Only two things. What should be the value and what should be the rate of tax? Don't worry. You can write a letter to your proper officer in writing and give the reasons for payment of tax on provisional basis and tell him, okay, I am not clear. I'm not clear what tax to be paid as to the value and rate of tax. You provide me what rate of tax. I am provisionally paying the tax at this rate. Whatever final thing you will give me, I will accept that. For example, have a look. I tell you the exact process. Mind it. Entire GST concept is based upon self-assessment section 59. Section 60 is not a mandatory assessment. Section 60 is optional. If you have confusion as to rate and the value, you can opt for this. What will you do? You will make an application to the officer. That officer, I am not getting. Mujhe samajh nahi aa raha hai that what should be the rate or what should be the value. So proper officer will issue notice in form ASMT 02 if he wants some additional information. You will reply and he will pass the provisional assessment order okay within 90 days. So he's supposed to give you answer within a period of 90 days that okay, indicating what bond and security you are supposed to deposit and you can keep paying the tax at that rate. So security maximum is 25%. Then now after provisional assessment, he's supposed to make the final assessment that, okay, now I have checked. And what is the time period? Within 6 months from provisional assessment, he must give a final order. Now in final assessment, it can be both ways. He can say, okay, let's suppose you are paying tax at the 12%. He says, okay, 12% is the final rate. You go ahead, no problem. But if he says that no, it is 18%, which should be the actual rate, then you are supposed to pay the difference of 6% of tax along with interest. Along with interest. And let's suppose you were paying at 18% and he says, no, in final assessment, it is 12%. So department will give you the refund of the tax along with interest. But interest rates are very, very different. When you will be giving, it will be 18% interest. 6% tax difference plus 18% interest. Department will be giving 6% refund along with 6% interest. So final assessment can come either way. higher rate, lower rate. So depending upon that, the remaining amount you will pay, and you will get your final assessment order, and the security and the bond which you furnished will be released. So I have given you a number of examples where you are not able to understand classification issues, quantity discount. I don't know whether this discount is to be reduced or not. Let's suppose you are paying some additional charges, electricity, rentals, whether these will be added or not. If there are reimbursement, for example, chartered accountants, and you go for bank audits. Let's suppose, the law is very clear on it, but let's suppose you are not getting, if I'm getting any reimbursement of the hotel or something, should I pay tax on the same? So such where you are not clear as to the value, where you are not clear as to the rate, you can apply for the provisional assessment, right? So next comes is section 61, which is scrutiny of assessments, scrutiny of returns. Now, taxpayer, you have filed the return under section 59. You have filed the return, but department wants to check that return. So it will take you to section 61. Now let's see what happens to a graphical presentation. Registered person is furnishing the return. The return goes to the proper officer. He says, he checks the return and RP to verify the correctness of the return and inform of the discrepancies. And he has to give the explanation within a period of 30 days. He will serve a notice. Okay, taxpayer, registered person, I'm not clear as to these points, as to the correctness of the return, and you are supposed to give reply to the discrepancies within a period of 30 days. He furnishes, see, this notice comes in ASMT 10. ASMT 10. Now, here also, what does the return means? There are 3 returns in GST. Section 39, Section 44, and Section 45. GSTR 1 is in section 37, which is not a return. Return is described and it means only 39, 44, your annual return, and 45, your final return. Final return is GSTR 10. So if there is any discrepancy in this return, he will issue you a notice. You are supposed to reply. If you reply and officer accepts it, satisfactory explanation, he will issue you ASMT 12. Done. But if he is not satisfied, you are supposed to pay the tax within a period of 30 days. That, okay, within a period of 30 days of being informed by the proper officer that the registered person, your discrepancies are, you are either you don't reply or you reply which is not up to the satisfaction of the officer, then he may initiate action against you under section 65, yani audit, inspection, demand and recovery. So remember my words, that audit and assessments are the trigger points for section 73 and 74. So he will issue your notice, you will reply back within 30 days. If you don't do so or he's not satisfied by your explanation, he can drag you to section 73, 74 or even in the audits, or can go for inspection. Right? Now, next section is section 62. It was a non-filer. Hurry, you were supposed to file the return. If the person has filed the return, the officer will scrutinize that return in section 61. If the officer has not filed, the RTP has not filed the return, assessment will be taken in case of non-filer of return, and it is going to be a best judgment assessment because you have not filed the return. Officer says, registered person, you have not filed the return. Friends, in last section, there were 3 sections of return, 39, 44, 45. Here, they have not mentioned section 44. Only 30. See, you have to read the law verbatim, especially when you are dealing with the litigation clauses. So registered person, because you have not filed the returns under 39, 45, in this, you will get a notice under section 46. Come, file the return, within 15 days, furnish the return. And if you don't furnish the return, He will do the best judgment assessment according to his own ways. Please, there are a number of cases which says that best judgment does not mean that the officers should be very, very unreasonable. He applies the GP rate of 30, you say 60%, 70%, no. Reasonable, with some proper ground, he can make the best judgment assessment. He can issue you an assessment order in ASMT 13 and a summary in DRC 07 within a period of 5 years from the due date of annual return. 5 saal, 5 years. If you furnish the return within 30 days, the assessment order shall, very important, if even if he has passed the order and after that also you furnish the return within 30 days, that assessment will be stand withdrawn and your return will step into the shoes of original return. So you will be liable to pay tax plus interest plus late fee. Remember, there is no separate notice for BJA. You will get the section 46 notice, that is a deemed notice for BJA. So mat sochega you will get any other notice. No, whatever the first notice will come, otherwise the officer will do BJA. And this is what I have elaborated through this also. Right? All right. Because I always see the picture is worth 1,000 words, you know. It can fit in our mind much better than anything else can. All right. Now, moving ahead, assessment of unregistered persons. If I talk about the assessment of unregistered persons, the person is not even taken. See, 61, you file the return. 62, you have not filed the return, but you are registered. 63 is, you are a person who is not even registered, but you are supposed to be registered. So, and friends, one thing more, I have mentioned the rule here also, that what rule is there. So, taxable, now see the word, it is taxable person. Previously, it was registered person, because here the person has not taken the registration. A taxable person fails to obtain the registration where he is supposed to do so, or whose registration has been cancelled. The proper officer, best to his judgment, within a period of 5 years, can issue him the notice, can make his assessment. Here you will get a proper notice under this section itself, section 62. In section 60, in section 63, in section 62, there was no separate notice. Section 46 was a deemed notice of BJ. But in section 63, you will get a specific notice of opportunity of being heard. Right? So you will get the notice in the ASMT 10, shall be in that it was issued under ASMT 13. Here you will get the notice and you are supposed to reply for the same. If you fail to do so, the order will be passed. Right? And last we have is section 64 in assessments. Some special cases where the officer feels, and see, it is with the permission from additional commissioner or joint commissioner. He has some evidence, okay, that this person is going to run away. I have to make his assessment right now to protect the interest of the revenue. Then the officer resorts to special assessment under section 64. By taking permission of additional or the joint commissioner. So it is a type of assessment which is taken up in special circumstances and is not a substitute for the assessment or for the time period of assessment, right? So friends, in this, I have given the rules also, that what rule is applicable to what type of assessment or audits, and the various forms also, starting from ASMT 01 to ASMT 018 and ADT audit forms also. Now, what is this audit? Have a look. Let me share the audit screen also with all of you. Where are you audits? Here. Yes. So GST audits, legal provisions. Is not it getting a little bulky? No, that's not so. So what we talked about during the day was refunds. Then we came on to the assessments. We talked about 59 as assessment, 60, 61, 62, 63, and 64. So from 59 to 64, we covered about assessments. And now we are on section 65 and 66. Two sections of audits. One is the audit which is being taken by the department, and 65 and 66 is the special audit. And you all know what is audit. Audit means examination, detailed examination of records, returns, and other documents. What are the objectives of audit? Plugging the loopholes, proper valuations, checking assessments. So department nowadays is issuing a number of notices for departmental audit section 65, rule 101. And now this slide will explain you the entire proceedings of audit under section 65. Commissioner or any officer authorized by him, you can take the audit of a registered person. He is the proper officer. He is the registered person. He can take it for 1 year, 2 years, 3 years. But you must inform 15 days prior that, look, registered person, it can be both ways. I am coming at your premises for the audit, or you come to my office with all the relevant records. With all the relevant records, either you come to my office or I will be coming to your place of business. Mind it, audit can be done both ways. And you know who has been given this option? Is it the registered person who can decide कि आप हमें चाय पिलाएंगे कि हम आपको चाय पिलाएंगे? Answer is no. It is at the will of the proper officer that how he wants to conduct that audit. Either he wants to go to the place of business or he wants the RTP, registered person, to bring the documents to him. So 15 days prior, he will inform. Audit must be completed within a period of 3 months. Alright, from where these 3 months will start? Either when you actually conduct audit at the place of business, or otherwise when he will make you the record available, whichever is later. So when you actually start the audit at the place of business or when you get all the records, whichever is later, within a period of 3 months, which can be extended up to 6 months from the date of commencement, the audit must be completed. Proper officer, after completion of the audit, within 30 days, you must give the finding of audit from the conclusion of the audit that these are my report, these are my finding. And if there is any tax payable, tax not paid, short paid, ITC wrongly availed, action will be taken under 73 or 74. Again, assessments paved the way for 73, 74. Audit paved the way for action in 73 or 74. So it is the officer who commissioner who can authorize any officer by a journal order or a specific order that, okay, you can conduct the audit. And when he will be conducting the audit, either at his own office or at the premises of the registered person, the choice is with the officer. 15 days prior, you must inform. Form ADT 01. And it must be done within a period of 3 months or can be extended for a period of 6 months, and the audit must be completed. Apart from that, we have the special audit also. Special audit, like in income tax, we have 142(2)(a). Likewise, we have here special audit, which can be done by chartered accountant or a CMA nominated by the commissioner. That, okay, there is very complexity in accounts. Values are not declared properly. ITC is not within normal limits. So then in that case, a detailed scrutiny, inquiry, investigation is required, which is taken under section 66. It can be due to the cost, the voluminous nature of account, the technical nature of the account, that this can be referred. Special audit must be completed within a period of 90 days or the extended period of 90 plus 90 days. Of course, opportunity of being heard must be allowed to the registered person in case of finding. Expense कौन bear करेगा? Who will bear the expenses? It has to be borne by all the expenses of the chartered accountant to the cost accountant shall be determined and paid by the commissioner, and the decision of commissioner will be final in this respect. Nowadays, lots of audits are going on a number of forms. Again, I have given, these are audit manuals where what an officer should collect and what forms they can ask you to furnish are given. They are considering nowadays audits very frequently for number of taxpayers. They are checking a number of points that if there is R1 or 3B difference, 3B and 2A difference, refunds, more refunds are taken. Certain goods which are highly sensitive goods, transitional input tax credit has been more taken by the person concerned. So in all these areas, these can be the basis for conducting these audit in the premises. So see, I've given you a list of a number of reasons. Here I show you that based upon these are the 39 examples based on which the audits can be, your concern, client's concern can be chosen for the purpose of audit by the department under section 65E1. Right? So I'm not taking the audits much in detail. Now let me proceed further to the next section. Friends, we have been talking about section 73, 74 for so long. Let me come to 73 and 74. I think so. The slide was visible previously, right? Because in my, it was showing. Okay, all right. Let me come to the 73, 74 part. Friends, I told you that show cause notices are taken under 73, 74. So these are the main recovery sections. Here it is. Demand and recovery under section 73, 74. Why it is not turning to slideshow? Anyhow, I just continue it with like this. I hope you all can see, or else I try it once more if it turns to slideshow. Oh, all right. Here it is. Very, very important sections. Demand and recovery, 73, 74. Chapter 15. 73 deals with non-fraud cases. 74 deals with fraud cases. If in 73 is for reason other than fraud, but you have ITC, you have taken more ITC, taxes short paid, refunds have been erroneously taken, but other than the fraud, willful misstatement and suppression. If it is by reason of fraud, willful or misrepresentation, that it will be covered under 74. See, what are the reasons? Tax not paid, short paid, erroneous refund, ITC wrongly availed or utilized. Due to fraud or misrepresentation will be covered under 74. Other than fraud or misrepresentation will be covered under 73. In section 73, the notice must at least come 3 months prior. And in 74, at least 6 months prior. The proper officer must pass the order within 3 years. And here, 5 years. And you know, the time period for the first year, 17-18, has expired. For issue of the 3 years have already expired, and it is to be counted from annual return. And you know, when annual return time period was extending, it was even 2020. The first return was due on 5th or 7th of February 2020, annual return. So 3 years were expiring. Government has extended the time period because it was expiring. So they have further extended it up to September 2023. So it can still be issued, but the normal time period is 3 years, 5 years from the date of annual return. That is why some person was saying. Now see how the time periods work. Within 3 years, order to be passed, at least 3 months prior, notice must be issued. So for notice, the time period comes out to be 2 years, 9 months, and 3 years is the order passing date. For fraud cases, 6 months before notice should be issued. So notice time period 4 years, 6 months, and order should be passed within a period of 5 years. So 2 years, 9 months, that notice must come. Within 3 years, order must be passed. And here in fraud cases, 4 years, 6 months, the notice must be issued, and 5 years, the order must be passed. Right, friends, in 73, 74 are very detailed sections. Along with it, we have the penalty differences also. Because if you have fraud case, the penalty is going to be higher. And please, does the concept of mens rea exist? Answer is no. You need not to be of the guilty mind in civil law cases. Yes, law can do this. That if the statute can do this, that if the fraud is involved, the penalty can be higher. If the fraud is not there, misrepresentation is not there, penalty can be lower. And that is what is in front of you, section 73 and 74. If it is a non-fraud case, the penalties are lower. If it is a fraud case, here no penalty till issue of SCN. And till 30 days, you can pay 10% after 30 days, 10% of tax or 10,000. So this is the maximum penalty, However, here, even before issuance of SCN, 15%, 25%, 50%, and 100% of tax. So you see, if it is a fraud case, the penalty is higher in 74 and lower in case of 73. So friends, I have given you a brief idea of all the topics. One more topic is with me, which is appeals. And I will give you a brief idea about the appeals, and then we'll open the house for any queries which you have on the concerned topics. So these are the sections which deals appellate remedy is one of the rights of the taxpayers, where you can file the appeals to the higher forums. In GST, section 107 deals with the appeals. Then you have revision and so on. And there are various rules from 108 to 116 which deals with it. If I talk about appeals, remedies, so you have appeal, appellate remedy, revision, and rectification under GST. You know what is the unique feature in GST for appeals? In income tax, the first appeal can be filed only by the taxpayer. But in GST, it is not so. Aggrieved person can also file the appeal to first authority and subsequently also. And even the officer, commissioner can direct any officer to file its own. The department can also go against its own order to the appeal. So we have two sections, 107, here it is, 107.1 and 107.2. Aggrieved person can go to the appeal remedy against the order of the adjudicating authority. Commissioner to direct any officer subordinate to him to appeal to appellate authority. In this case, we are supposed to make the pre-deposit, which is 10% of the disputed tax amount, subject to maximum of 25 crores. That is 50 crore, 25 plus 25, 50 crores. However, when department goes into appeal, there is no requirement of pre-deposit. There is a pre-deposit of 25% when the vehicle is detained. In case of vehicle detention, it is 25%. But the more important point is in 107.2, the department can itself go into appeal against its own order, right? Time periods are given. 3 months, within period of 3 months, you have to file the appeal. Friends, a very, very disaster point. Condonation power is only 1 month. It means if your appeal is delayed by 3 plus 1 month, more than that, the officer will not be able to condone the delay. Many cases are pending because of this reason, where the case could not be taken on merits because the time period for filing the appeal had already expired. After the first adjudicating authority, the appeal lies to appellate tribunal, GSTAT, which has not yet come into picture. then to High Court, then to Supreme Court, the GST Appellate Tribunal. This was the previous composition. The composition has recently changed. Composition for GST Appellate Tribunal has been proposed, but has not yet come into picture. Here, 20% is the pre-deposit with a maximum of 50 crores. But it's going to be more than 5 years now, GST coming into picture, but the appellate tribunal is yet to be formed. So with this, I end up my deliberation. The PPT will be shared through the platform of ICAI with all the members concerned. And over to you, Sakshi ma'am.
Thank you so much, ma'am. It was such an insightful deliberation. If you allow, can we take some of the questions from our viewers?
Definitely.
Yeah. So I have this question from Chennai. Can I claim refund for the exempted sales?
Sorry. You cannot claim the refund for the exempted sales, because if there is no output tax liability, the input tax cannot be claimed as refund. Rather, you are not eligible to take input tax credit. However, if you are exporting the exempt product, then it partakes the character of exports. Then only you can take the refund if you're exporting the exempt product. Otherwise, no refund of the if your output is exempt.
Okay, I hope the query is resolved. Our next question is from Southwest Delhi. What are the documents required to maintain to claim inverted duty refund? Is the stock register mandatory?
Sakshi ma'am, I have already given the list of documents that the person is supposed to produce to the officer concerned as per Circular 125 in case of inverted duty rate structure. However, officer can demand you the copy of sales and purchase register as required under section as per Circular 125. So stock records directly cannot be asked for the purpose of refund.
Okay, thank you, ma'am. The next question is, what is the time limit within which refund is to be applied in case inverted duty refund?
I think so. The person concerned has posted the query earlier because the topic was taken at length, that it is 2 years from the due date of filing of 3B. Means if you are applying the refund for the month of June, the due date of filing 3B is 20th July, and 2 years from 20th July onwards will be the time period for filing of refund.
Okay. The next question is from Mumbai. Which book would you recommend for rereading and learning the GST sections, including case studies and examples?
What else can be better than the Institute's background material, which is contained in 2 volumes, and a number of publications with the experts on various topics? You can refer those. Those are really good ones.
And the last question is again from Southwest Delhi. Can LUT for FY 22-23 be filed now physically?
22-23 is over, and LUT cannot be filed online. LUT has to be filed online only. So the time period for 22-23 is already over. There is no fun of going for LUT.
Okay, thank you, ma'am. So with this question and answer round, we have come to an end for this session, and on behalf of WYMEC, I would like to take this opportunity to propose a formal vote of thanks. So first of all, I would like to thank our chairperson, WYMEC, CA Preeti Savla ji, and vice chairman, CA Abhay Chhajjar ji, for coming up with such a great idea for commencing this interactive virtual series with an impactful title, Unleash Your Potential. Thank you so much, ma'am and sir. Next, I would like to thank our speaker for the session, CA Achal ma'am. Thank you so much, ma'am, for taking time off your busy schedule, for sparing your valuable time with us, enriching us with your knowledge and expertise. Thank you for being with us today. Thank you, ma'am. Next, I always believe that the success of any event depends upon its audience. So next, I would like to thank our viewers for being the part of this learning process and growing together. Last but not the least, thank you to the technical team for the flawless and smooth commencement of the session. Thank you all. Thank you so much, ma'am.
Thank you for the wonderful show and the lovely audience who were patiently listening for the 2 hours continuously. I know it's very difficult to listen. Thank you, the committee, for their support, and all the members. Thank you for making me part of it. Thanks a lot.
Thank you, ma'am.